Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, a case for the bulls. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on the premium list, which you can find a link to in the description below, or go to intothecryptoverse.com. So anytime I make a video where I talk about a case for the bulls or a case for the bears, I then tend to make the reverse video and talk about the other side. The reason is because I don't want to let my own personal bias cloud the type of analysis that I show you, right? I mean, my bias is for the entire market to trend higher, but at the same time, I don't want my bias to cloud the view that I show everyone, which is why I put out a video earlier calling it, a case for the bears, and we looked at the reasons why the market looks bearish. Now, I want to go through a scenario or all the metrics that we can look at to talk about why the market looks bullish as well. Because again, there's a case either way, and there's not necessarily a right or wrong answer. There's not necessarily a predetermined path that we have to take. There are just simply probabilities, and a lot of outcomes aren't necessarily known yet because we're still waiting to see how some of these macroeconomic conditions ultimately play out. So what I want to do is we're going to systematically go through the case for the bulls, and this obviously gives a little bit more optimistic view on the market rather than the case for the bears that we showed a few hours ago. So let's go through each one. All right. So what we're going to do is we're going to go over to the website that I have, and we're going to go through a lot of different charts. All right. So this is probably going to be a longer video, but if you want a tour here of a lot of the charts we have on here and to make your own conclusions based on what you see, then I think that would be the best scenario. So I'm presenting the case for the bears in the last video, the case for the bulls in this video. You figure out where you think it's going and act accordingly. So the first thing we can look at is the total crypto market capitalization, not just Bitcoin, but the entire asset class. And arguably, it seems like the asset class still could support another leg for the cycle. Now, this is based on logarithmic regression that is fit to all data. And the red line is I'm basically minimizing the logarithmic difference between the fair value and the market capitalization. And I minimize the summation of the logarithmic difference, I should say. And that's how I get the red line. And then the green lines are basically just translations of the red one to find the bear market bottoms and the market cycle tops. So this is the chart that comes from that analysis, and as you can see, we're around the fair value. Okay, I mean 44% overvalued when compared to the fair value line, which means we have some wiggle room there. But more or less, we're not in the undervaluation territory. We're not down here. So you could easily argue that we are not yet predestined to go down there in the short term, right? It could happen, but we're not down there right now. And it seems like this cycle still has more that it could theoretically give. Okay, so this is one chart. Another chart is to look at the percent difference between the market cap and the fair value logarithmic regression trend line, which, as I've said before, is a monotonically increasing function, and you get something that looks like this. And if you think about drawing an imaginary line through these data points, it also seems like this cycle could theoretically have more to give. I've always said, there's no reason why it can't extend further out. So this is the first reason why I think that you could argue that the market is still somewhat bullish. Another reason is to look at first of all, let's go through the market cycle ROI. So this is something I've obviously talked about a lot, the idea of diminishing returns and lengthening cycles. You could have one without the other, right? You could have lengthening cycles without diminishing returns. You could have diminishing returns without lengthening cycles. You could have both. You could have neither. If we don't put in a higher price, especially before the next halving, and we end up going into a long bear market, then clearly we would have had a similar type cycle and diminishing returns. If, on the other hand, we do put in a new all-time high, then we'll have a lengthened cycle, but we might not have diminishing returns. We'd have to wait to see how high it goes. But from this perspective, if you just look at the market cycle ROI, you would say, all right, well, the cycle tends to lengthen and returns tend to diminish. And if you look at it on a linear scale, it seems like if you always waited the same amount of time for the prior cycle to assume that the next cycle would peak, you would have missed it by about 1 to 1.5 years, that final blow off top mania mode. So this one happened after a couple hundred days. This one happened after 700 something days. This one was after over 1,000 days, almost 1,100 days. So perhaps this cycle peak could be somewhere between, say, 1,400 to 1,600 days, and it just completely takes a lot of people by surprise. So this, I think, would be one argument. Another argument for the bulls, right? If the cycle lengthens, then there's no reason why we would have expected it to go parabolic at the end of 2021. And it didn't. I mean, it just went to the same price it had gone to back in April of 2021. So this is another reason that I think you could argue that the bulls have a case to be made. Now, another thing that I want to talk about, and I don't talk about this a ton on the public channel, but I think it's useful to occasionally talk about it, and I really want to hone in on this one for a few minutes. So we have the color-coded risk chart, okay? And it takes a few minutes to really understand this one and to dissect it, but essentially the idea is that we go from 0 to 1, the risk goes from basically low risk to high risk, from 0 to 1, or from blue to red. And what you'll notice, there are now 5 times where Bitcoin has gone to the dark red area, meaning 0.8, 0.9, 1 risk, the above 0.8 risk, okay? 5 times. Now, let's exclude the most recent one, and let's look at the prior 4. Out of those 4 times, 3 of them went back to the lowest risk bands. 3 of them. 1 of them did not, and that was the middle peak in 2013. It went back down to the light blue area. All right, so keep that in mind. That's where we are now. So I'll probably make another standalone video just on this in a few days, but I just want to talk about this for a couple minutes here. Now, what we're going to do is we're going to take the risk, the color out of it, and plot risk on the secondary y-axis. You get something that looks like this. All right. Now, what's interesting about this one is if you zoom in here, you can see that the intermediate peak of 2013 came down to 0.3 risk at its local bottom. By the way, this was like an 80 or 90% drop. It was pretty crazy. But you can see that it went down to 0.3 risk. If we come over here and look at where we have come so far, we went down to 0.3 risk. Okay, so the same area on the daily time frame at 35K. We know we went to lower than 35K, but that's just a concern with daily closes. So both of these pullbacks from 2013 and in this one, they both went to the 0.3 risk level. And then they both got a bounce, okay? So one of the things I mentioned before, that if this cycle is going to mimic 2013, which we don't know yet, but it would be a very stretched out version of 2013. This was the whole idea. So it already has come down to the 0.3 risk level once, but then let's hone in on what happened back in 2013. It then sort of popped up to 0.376 risk, and then more or less went sideways for a couple months, and then went all the way up to 0.399 risk before falling back down to 0.311 risk and then going parabolic. So let's keep that in mind. So it went up to around 0.376 risk and then just went sideways for a couple months. So what has it done this time so far? So this time it's gone up to 0.378 risk as of February 9th, and it's sort of been going sideways, all right? So there do remain some similarities. Now, what would that mean if it were going to continue to emulate 2013 in a stretched out manner? Well, it would mean basically the market would get relatively boring for a while. And we probably would just be between, say, like 35K to 45K for a few months. We then might rally up to the 0.4 risk level, back down to 0.311 or something, or close to 0.3, and then go parabolic. That would be if it's just a stretched out version of this one. So far, the similarities still remain, so I think you could make the case that it could potentially still emulate it, but I just wanted to bring this to your attention that there still do remain similarities between the 2013 move and the current move. So when you go back to the color-coded risk, we can see that there are 4 times where we went to the dark red. 3 of those times we ended up going to the lowest risk band before going back to the dark red. But one of those times we only went down to the 0.3 to 0.4 risk band before going back up to another parabolic top. Okay, so this is where we are today. We're in the light blue. The only question is, are we here? Are we here? Or are we here, right? Do we have to go one more leg down to complete the cycle? Do we have to have another 50% drop to complete it and then go into a long accumulation phase? Or do we hold the line at, 30K or above and then continue on? All right, so the bullish case would be that it's just a stretched out version here of the 2013 cycle, and that we went back down to the 0.3 risk level just like we did back then, and now we're just spending some time consolidating above it. So we're going to continue on. If you look at time in the risk bands, okay, so if we go back to this and we just break this up in time in the risk bands, what you'll notice is that if you go to all of the data, or let's go to the current cycle. First of all, if you go to the last cycle, we spent a majority of the time in the 0.3 to 0.4 risk band. Okay, a majority of the time in 0.3 to 0.4. But so far this cycle, we haven't spent a majority of the time in the 0.3 to 0.4 risk band, which is what we're currently in. So it's possible that we just have to spend a few more months into this risk band to get, to build out a strong base before we can really push higher and emulate something like we did back in the prior cycle, where we had the peak in terms of where we spent the most amount of days in a certain risk band. It was the 0.3 to 0.4 risk band. So far this cycle, it has been the 0.4 to 0.5 risk band. Okay. So continuing on, if we go look at the corridor, this is one that, it has held up pretty well. And so far what we've noticed is that it found a decent bottom here in the summer and also potentially here in January. And it hasn't broken yet, so I think we have to at least contend that it could continue to hold and that this could in fact be a local bottom. I also want to talk about the logarithmic fair value. Okay, so I think that one is an important one to look at as well, assuming I can find it. So we have this one right here. Now here the argument is, as long as Bitcoin stays above the bottom of the fair value band, then the cycle can continue. Like in 2013, it came down to the bottom of it, but we ultimately held and we continued along the way, and we ended up putting in a new peak. Here we did not in 2011. We also did not hold it in 2018. The question, are we going to hold it in 2022? And arguably, since we haven't let go of it yet, that's a point for the bulls, right? I mean, we still are above the lower bound. The lower bound is now at around 27 to 28K. So arguably, as long as we're above the 27 to 28K level, then we are still theoretically fine, right? We don't necessarily have to go down to these undervaluation levels for a while. We could hold the line here and then ultimately continue higher. So that would be the argument for the bulls, okay? Some other things that we can look at are the, something like the fear and greed index, but looking at the raw values and taking some type of moving average and seeing like, look, I mean, we have these sort of bottoming process on the fear and greed. When you look at just the raw values, if you don't have, say, a moving average, it's all over the place. But if you look at, say, a moving average, it maybe can help drown out the noise. And the argument is, what if we're just sort of rounding out this bottom here and then we're going to go back up? Okay, so there's definitely a lot of points to be made here in favor of the bulls, but I don't want to say that. I didn't want to come out and make a video just saying, hey, look at all this bullish stuff, because there is also bearish things going on, right? There are bearish aspects to the market, which we covered in the last video. Another, some of the bearish things we talked about could also easily dissipate, right? I mean, they could easily dissipate. One of the things is geopolitical issues going on in the world, right? Russia and Ukraine. Maybe that gets resolved and then people go back to being risk on. Maybe the dollar, the US dollar currency index over here, what if it rolls back over and goes below the bull market support band? Then it's risk on again, right? It's risk on. So there's a lot of things here in the short term that we just simply don't know, because we need to wait to see what happens. And furthermore, will Bitcoin get rejected off of the bull market support band? Okay, so this is a key thing. Okay, will it get rejected? And it's too early to say yet. Okay, it could easily get rejected here, and in the short term, it looks like it has. But you never really know. I mean, we still have some time here to to see if we can ultimately break out above it. Whether we can get back to it this week is anyone's guess. Potentially in following weeks, but what we don't want to see is we don't want to just see it come back down this way, because if it does that, if we're dropping back down, then there's a good chance we're going to put in a lower low. All right. So another thing to consider is, what if the NASDAQ and the S&P, what if they do put in a higher low, right? I mean, it certainly looks like we could easily put in a lower low, especially coming off a day where the NASDAQ dropped 3%. But what happens if we're able to put in a higher low and we start trending back up and do something like this? A lot of these things we just simply do not have the answer to, and it's impossible for me to know the answer to them anyways. I just want to provide, unbiased view of the market. And while I personally lean macro bullish, I also, in the short term, do see some bearish things popping up. So to summarize some of the things we've talked about so far, the reasons why I think bulls still have a chance and bears could be sent back into hibernation is looking at things like the total crypto market cap trend line and seeing that it seems like we could support another leg to the cycle, looking at the extension from the fair value and seeing that if you did draw an imaginary trend line through here, it seems like we could support another leg. If you look at the ROI from the market cycle bottom, we've seen that historically the cycles lengthen. If you look at something like the historical risk levels, we saw an instance like this in 2013 where we came back down to the 0.3 to 0.4 risk level, and we spent about half a year in that range. We are doing something like similar to that right now. The only thing that remains to be seen is, can we hold this range, or do we end up dropping well below it? And then furthermore, we have bounced off the lower bound of the corridor twice now, and Bitcoin still remains above the fair value logarithmic regression trend line. I think these are all points for the bulls. And then one more thing here with regards to the regression, you could argue that since we didn't go to the top of this band, then there's no reason we have to go to the bottom of this one. So perhaps we do come back down, but maybe we just hold it at 30K and then trend higher, right? These are all possibilities that could make sense. Furthermore, if you just go to sort of the Bitcoin chart and you ignore all these moving averages and all that sort of stuff, you could just say that Bitcoin has just been range bound for a year now, and that it's just been a lot of time between these, between 30 and 60K. And this is just sort of noise, right? In the grand scheme of things, it's just noise. And ultimately, it doesn't really matter what happens here until we either break down or break up. And we don't know, right? We just simply don't know which way it's going to ultimately go. Obviously, people are placing their bets on which way it's going to ultimately go, but we just simply cannot know ahead of time what it's actually going to do. So, there certainly are a lot of things we can look at in this market to try to understand, what is the best way to navigate this asset class. Hopefully, I've done a decent job of showing you guys in the last video what the downside risk is based on what we've seen in prior cycles. But I also wanted to paint the full picture and to show, why I still have Bitcoin, why I still own Bitcoin, and why I still buy it. Okay, I mean, I'm not selling my Bitcoin, I'm still buying it. And the reason is because even if it does go down, I have the conviction that it would ultimately go back up. But also because there are still plenty of indicators that suggest that that Bitcoin could still remain bullish if it can get past some of these hurdles here in the short term. And those main hurdles, I think, are just macroeconomic conditions and the Fed fighting inflation and tapering and rolling over the balance sheet, and then also some of the geopolitical concerns that we are currently facing. And then also, there's going to be some types of regulation coming for crypto. What if it's a good regulation? What if it's good regulation and everyone's expecting awful regulations? Like, maybe everyone's expecting it to be really bad, but then if it comes out and it's really good and allows a lot of institutions to come pouring into the market, then that could be a game changer. Other things that we really didn't have last cycle as much as, this cycle we have Tesla that bought $1.5 billion worth of Bitcoin, and MicroStrategy, and we also have El Salvador constantly buying the dip. So there do continue to remain bullish signs, and there also continue to remain bearish signs. The truth is, no one really knows what's going to happen. Hopefully, you can use the analysis that I've shown to come up to your own conclusions rather than relying on someone else to tell you what's going to happen. Because at the end of the day, remember, no one knows. It's all just, these are all just models that we try to figure out to try to give us an edge. But at the end of the day, these are really difficult things to navigate. And then finally, I guess we will see if Bitcoin can hang above the 100-week SMA. Okay, I mean, historically, if we go below the 50-week, we go to the 200-week. But here we are, we're still above the 100-week SMA. It's currently at around 32.7K. And so we'll see if we can bounce off that. And then another idea for the bulls would be the regression bands. In the same way that we sort of got rejected off the bottom of the upper regression band, if we do come back down to 30K, then maybe we would hold it as support, the top of the lower regression band, and then trend back up. So I don't know. We'll have to wait and see. And then we'll take it one step at a time. So look, tons of data that we can look at. I mean, we could go through a lot more charts, but you get the idea, right? There's a case for the bulls. There's a case for the bears. Figure out where you stand and then plan accordingly. And all you can really do is place your bets based on the probability of you think certain things happening, and be prepared for either scenario, okay? I mean, I think if you just go big on one scenario, that can come back to bite you. Like if you think that it has to go back to 20K and it doesn't, then you could miss the run to 100K. Or if you think that it has to go to 100K without going back down first, then you might put all your chips in the basket before you really want to, especially if it goes back down further, and then you might want to buy more. So you need to plan for both scenarios, and hopefully you can navigate the cryptoverse in a better manner than you might otherwise would have. So there you have it, the case for the bulls. If you missed the case for the bears, go back and watch the prior video, and we will continue to see how this market unfolds. Thank you guys for tuning in. Check out the premium list at intothecryptoverse.com, and you get access to all these charts that we just showed and a lot more, including social metrics charts, derivative charts, on-chain charts, all these ROI charts, et cetera, et cetera, et cetera. So check it out. Subscribe. I'll see you guys next time. Bye.